Recording and starting.
Hello everyone, I'm John Thomas, the Mad Hedge Fund Trader, and today we're going to talk about trading the chaos. There has been plenty of chaos in the markets, up, down, sideways, major sectors leading, others being completely ignored. We're going to talk about all of that. Before we move on, let me tell you why you should be listening to me. I am a 50-year veteran of the global financial markets. I spent 10 years as the economist correspondent in Tokyo, Japan, and later the White House under Ronald Reagan. I spent 10 more years running the international equity division at Morgan Stanley. Little brief timeout as a Marine Corps combat pilot in Desert Storm, and then 10 years running the first international dedicated hedge fund. 5 years fracking for natural gas, and I still have oil under my fingernails from that little enterprise. And I spent the last 12 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who is still breathing and still working for a living. My family origins are very humble. I grew up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood playing Little League baseball and later becoming an Eagle Scout. There wasn't much to do in rural California in those days but hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiner. I quickly found the stock pages, bought IBM at $20 and sold it at $30, and suddenly found a far better way to make money than delivering newspapers on the back of a bicycle. By the time I was 16, I had earned enough money to fly to Europe. By the age of 17, I'd visited more than 50 countries and spoke 4 languages. And there is one of the first newspapers I delivered, the Kennedy assassination, and that's me hitchhiking in southern France and not getting any rides because I had an American flag on my pack. Wasn't too popular in the 60s. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't meet interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government decided to send me to Southeast Asia for a few years of research, where I learned to fly and jump out of perfectly good airplanes. There I advised the militaries of American Asian allies. And in those days, research required you to carry a World War II 45 caliber Sten gun wherever you went. All I got for my government service was a box full of medals, which I trot out every year for the Veterans Day Parade. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way out to India and Pakistan. And if you're wondering why I'm so skinny in that picture, it's because there was a famine going on in China where 50 million people died. You couldn't buy food for all the money in the world, and believe me, there is no substitute for food. Down in Saipan, we used to find World War II bombs on Saturday night, get drunk, set fire to them, and then run like crazy. Wasn't much to do in the islands in those days. That's how we had a good time. I figured out very quickly you didn't have to be that smart to make money in the stock market. So I got into the business joining Morgan Stanley. After 10 years there, I started my own hedge fund. And this is me losing the All Japan National Karate Championships. Warning, do not go into a fight with a broken wrist, which is exactly what I was doing there. I rapidly became the top performing hedge fund manager of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say that when your income goes from the thousands to the tens of millions, it really has a big impact on your lifestyle. For example, you get to have your own private plane, fly you whenever you want, get to buy the latest hot car, go marlin fishing, and collect vintage Rolls Royces just for fun. This is my 1925 Silver Ghost at the Pebble Beach car show. I sold my hedge fund in 2000, retired to go into the oil and gas industry. After making a killing there, I missed the stock market and started the Diary of a Mad Hedge Fund Trader in 2008. I remember I bought natural gas at $2 a BTU and sold it at $17 a BTU. It's now back down to $1.50. I now spend my days pursuing my first love, finding winning trade alerts, but now I do it for my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more satisfaction leveling the playing field for the average guy and teaching them how to trade. And that includes you. If I can take a $50,000 account and turn it into $500,000, that is far more job satisfaction than I could ever get anywhere else. However, every silver lining has a cloud. I made $10.5 million trading last year, had to pay $3.8 million in taxes on it. I just fall down on my knees and thank God I can pay the taxes without having an appreciable cut in my lifestyle, which is what used to happen. It's a problem you wish you had. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. You see an old plane flying loops over San Francisco or London these days, it's probably me. That's a 1932 de Havilland Tiger Moth. Notice the design flaws, gas tank right over your head, and no brakes, so we can only land on grass fields. And that is a 1938 Boeing Stearman, which they used to use to train pilots for the U.S. Air Force. The ultimate luxury is to give to those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and am a major donor to wounded warriors. When wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. So this is what the smart money is doing in the market right now. It is keeping positions small and waiting for the next trade reversal. Don't try and second guess the next tweet. Just close your eyes and buy every dip. Hedging out downside market risks with put options, defensive sectors, and bear ETFs, and also buying volatility. And they're buying gold and silver on dips for a return to much higher volatility this year. And if you wonder why I'm so happy in that picture, that's because I'm flying a P-51 Mustang. This is my friend Geraldine, who I fly about once a year whenever I visit Florida. It's kind of a combination between a jet plane and a piston engine. However, it will kill you if you don't know how to get out of stalls. So the global economy is confused right now. It's crawling out of a 2-year earnings recession caused by the trade war. Tech and biotech will still lead, but emerging markets, banking, and industrials are back in play. Global quantitative easing will limit any downside. Brexit is going through, which is negative for the world economy, but the elimination of the uncertainty over Brexit is a positive. However, Brexit still isn't happening. They're just talking about it. A weak dollar caused by exploding U.S. deficits will decide many trades going forward, such as in the bond markets and in foreign exchange. Stocks are definitely stretching the limits. They're moving to 2-decade valuation highs at 20 times earnings. And what's happening now is what happens whenever we get up to a 20 times earnings multiple. They say valuations don't matter. You should just buy it. It's a liquidity-driven market. I saw that happen in 2008, before that, 1999, and before that, 1987, and before that, 1973. It just seems to be a recurring thing that people always get most bullish at market tops, and that's what makes market tops. So a 4% correction in the market is imminent, probably in February. Buying long-dated volatility index positions is the smart trade to do today. I would recommend the VXX $16 calls, which I picked up last week when the VIX was at $12. Alphabet has topped $1 trillion in market cap, making it the fourth company to do so after Apple, Amazon, and Microsoft. All of these companies are based on the U.S. West Coast, so you have to really wonder what's in the drinking water out here. Continue to focus on big tech and biotech, the market leaders. Continue buying the dips. 2020s will close at the high, but with much higher volatility. Bottom line, marginal new high, then a 4% sell-off, and then another new high after that. This is the Sp500 chart, and we've included in here the buy signals generated by our proprietary algorithm. You see we got a buy here, a buy here, a buy here. We're expecting a dip, which we want to buy, and then we go on to new highs for the 2020 target of 3,500. NASDAQ, similar sort of picture. We went short going into the August sell-off, got back in, and got another buy here. We're taking profits now. Expect the downturn, we'll get back in, looking for a target on the upside of 10 or 11,000. Again, having an algorithm tell you when to do all this stuff is enormously helpful. Microsoft, one of our favorite stocks for the last 10 years. We've been buying it since the end of the 08-09 crash. Got a recent buy down here in August, another one in September, another one in the beginning of December when the president said the trade war could go on for another year. We're looking to come out now, buy maybe $10 lower down, and we're targeting $200 for Microsoft sometime in 2020. Apple, now a $1.4 trillion company. Too bad Steve Jobs is not alive to see it. We've been hugely bullish on this stock for the last decade with recent buys, again, August, October, and December. Looking for a minor correction there back to 300 or so, and then new highs. We're looking for eventually $400 a share for Apple sometime this year. Amazon is playing catch up. It's tarred with the brush of being a retailer, which is the world's worst sector to be in. However, even Amazon has started to catch up lately, and we got buys in October and in December on that one. PayPal, we absolutely love. FinTech, we think it's eating the lunch of the legacy banks, looking for major buys there, and this probably is a double over the next 3 years at a very minimum. And there are many other FinTech companies you can buy, like Square, for example, that'll do just as well. Nvidia, huge bullish case for Nvidia. We're looking for at least a triple in this stock. There's a global shortage of computer chips worldwide, and only 3 companies actually make these. So again, you want to be buying every dip in this. You will get major returns on Nvidia. Salesforce, big dominant cloud player. The future of the global economy is in the cloud. And of course, we've been using our algo to time our entry points on the long side here and in here. Boeing, certainly a troubled company, but it's created some great trading opportunities. We bought it after the first 737 MAX grounding a year ago. We bought it again in August, sold it, got back in, sold it, and we just recently bought it just over $300 a share, and the last print I saw on this morning was $324. So we'll make another profit on Boeing. The next big thing to happen here is recertification of the 737 MAX, and then a monster move up to $450. It's one of the best medium-term investment opportunities out there. And by the way, the reason we aren't going down anymore below 300 is nobody is selling. You know, most institutions are committed to the long-term health of this company. It's only the day traders and hedge funds that are trading these margins. Walt Disney is the next Netflix. They just rolled out their Disney Plus. They're taking over the world, and they're already accounting for 40% of all theater ticket sales in the US. You're getting a very long consolidation right here. That's a very healthy sign. And my guess is once we get down, or once the 200-day moving average rises up to the current level, we'll tack on another 20 or 25%. Bonds are trapped in a range. Bonds have been trendless since August. Winding down of the trade war has been supporting prices, but exploding U.S. deficits are capping prices. The narrowing wedge has made ranges too small to trade. Weak U.S. dollar is stopping all rallies. Stay away from bonds until we get more volatility. As long as interest rates are flat, stocks will be strong. Here is the TLT, which we used to do 2 round trips a month on. You can see we did a buy, a sell, a buy, a sell, a buy. But after that, nothing. We've just had a flat line, so we're staying out. And besides, there are better fish to fry right now in the equity market. There's the 10-year Treasury at 169. Foreign currencies, we're looking for a dollar dive. Massive government borrowing will bring long-term structural dollar weaknesses. U.S. national debt to hit 25 trillion in 2 years. Euro is bouncing on a Brexit win. British pound soared on a Johnson election win. That's the biggest majority there in 32 years. Aussie jumps on a trade deal light. Bottom line, sell the U.S. dollar against everything. And you may be asking the question, why should I care about foreign exchange when I'm just trading the stock market? Well, it's very simple. The more asset classes you cover, the more insights you get into all of them. If you cover all the asset classes that exist, you'll have tremendous insights into what the stock market will do in the future. That's why I do it. That's why it's a system I developed over the last 50 years, and it works like a charm. Here's the US dollar basket. You have a perfect head and shoulders top setting up here. Left shoulder, right shoulder, head, first sell there, second sell there. It looks like we're moving into a major downtrend over here. So sell the US dollar, buy the euro, buy the Japanese yen. Biggest buy you can do is the Australian dollar. This is a 10-year chart. You can see we're making up a double bottom right here, just under the 70 level. My target for this over the next couple years is parity or 1-to-1, and that gives you nearly a 40% return over the next few years just playing the Australian dollar. Energy has just done another swan dive. It gave up all the gains from the Iran assassination, dropping 10%. Any price spike will be temporary, as oversupply against fading demand will last for years. The trade deal with China is positive as it opens the way for more natural gas purchases by China. Energy shares have rallied, but few are convinced it's sustainable. Avoid all energy plays like the plague. It could drop by half in the next recession, whenever that is. Overproduction is capping prices. We went short oil here when we got this brief spike over the attack on the Saudi refining facilities. We bought it back down here, sold it again after the Iran general assassination. So you want to use every geopolitical crisis and spike in prices to go short. Eventually, we think we hit $42 a barrel because of oversupply considerations. Remember, when Saudi Arabia wants to get out of the oil business, you should too. That's what they did with taking Saudi Aramco public, which they did last year. Here is a 20-year chart on oil, and you can see there's a major downtrend developing, eventually with a target of $10. That's what happens when you have alternatives taking over the world, electric cars rising in their share of new car sales every year. Precious metals, there is a gold rush underway. Gold remains bid despite the failure of stocks to sell off. Institutions are adding to gold as a hedge to existing risk-on positions in equities. Only a 22% move takes gold prices to new all-time highs. Risk off means buy gold. Central banks are still pouring gold into every month. Bottom line, buy a bigger dip in gold and precious metals. It is the ultimate hedge. and that is me doing some early Christmas shopping in the Istanbul gold market. I do tend to get around a lot. Here is your gold chart with our algorithmic buys. We got a buy there last August, another buy in December, and it's going to be off to the races pretty soon, targeting 1920 in gold, up 43% from current levels. That's a new all-time high, and longer-term forecasts go all the way up to 3,000. Of course, if you like gold, you got to love gold miners. That's the GDX. And again, looking for major upside there also. Then if you like the gold miners, you like individual gold companies even more. This is the world's largest gold miner, Barrick Gold. Ticker symbol, which they just got, which is by taking over another company, which is GOLD. And again, we're getting major buys setting up in the gold sector. There is another alternative investment opportunity. It's where the future lies. It's a sector of one. Tesla's cumulative total production will hit 1 million cars this month. Battery costs have dropped 80% over the last 10 years and will fall another 80% over the next 10 years. Second factory in Shanghai increases production from 400,000 to 550,000 a year. They're bringing out the Model Y small SUV and the Cyber pickup truck due out next year. U.S. electric car sales have risen from 0% 10 years ago to 4% of the market today and will soar to 100% in 20 years. Tesla is already outselling all premium car brands in the U.S. Combined, including Mercedes, BMW, Audi, and Jaguar, and has a 10-year head start. Many countries and U.S. states have banned the internal combustion engine by 2030 or 2040. Tesla will become the world's largest car company within a decade, if not within the next 5 years, causing the shares to rise tenfold. Last year, we put out a major buy in the stock back in June at $180 a share. Most recent buy was here in October, and we went just short of $600 a share this week. Our initial cost, we recommended the stock 10 years ago, was $16.50 after the IPO bombed. And again, we're looking for about $2,500 a share long-term in this company. This is my newest Model X. That's the high-performance $162,000, fully tricked out with ludicrous mode. Does 0 to 60 in 2.9 seconds. Warning, if you do go 0 to 60 in 2.9 seconds, bring some air sickness bags that you picked off an airline because your passengers might get sick. I'm immune to car sickness because I'm a combat pilot, but kids, not so much the case. So if you want your car smelling like it costs $162,000, be careful when you accelerate with passengers in it. This is my third Tesla. I actually have totaled 2 of these already. This is my first Tesla totaled by a drunk driver in a Silverado pickup truck. I used to completely take the car to pieces. A lot of people talk about Tesla, but very few have taken them apart. Take a look at the battery pack here. That's 1,100 pounds of lithium ion. In 5 years, that will be more like 100 pounds of lithium ion that takes you 330 miles on one charge. And here's the honeycomb wheel well that makes this the safest car in the world to drive. In this accident, I just got out, took a picture of the guy's driver's license, and then called an Uber cab to get home. Don't play with matches. You could probably do okay just buying all the stocks I mentioned above and forgetting about them. But the fact is, the conditions in these companies change every day. They are all viciously competing, trying to put each other out of business. If you don't get daily updates on the fundamentals, you could easily get wiped out. Today's big winner could instantly become tomorrow's loser. That's why you need somebody like me to guide you through the thicket to avoid an out-of-the-blue blow-up. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. And to prove I can trade anywhere, anytime, this is me in North Africa, doing all I can to smile because it's 120 degrees. When that wind comes off the Sahara Desert, it is really unbelievable. The harsh truth is you really need my help. The majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that is to get educated. Fidelity did a 20-year study and learned that their top performing investors were dead people. What do dead people all have in common? They never sell. That's not a bad thing when the market's going from 10,000 to 29,000 as it has done over the last 20 years. You need a real pro to guide you through the market maze. The market is not monolithic. 95% of it can be completely ignored. The best thing you can do is concentrate on the 5% that is moving up the fastest. There are a few great sectors, a lot of awful ones. You can earn a 10 times return on the great ones, but get wiped out by the losers. Let a 50-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. And I've been doing this forever. I'm good at it, and I absolutely love doing it. This is one of my secret weapons, the Mad Hedge Profit Predictor. That's a market timing index, an artificially intelligence-driven algorithm that analyzes 30 different economic, technical, and momentum-driven indicators 24/7. Why do you need an algorithm? Well, why use a toolbox missing its most important tool? Algorithms have become so dominant in the market that you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than any human can. Imagine a trading strategy that updates itself 30 times a day. Don't go to a gunfight with a knife. If you are trading against algos alone, you will lose. Algorithms provide you with a defined systematic trading discipline that will enhance your profits. I'm not the only one using algorithms. I was walking on the waterfront in Miami last year and found this super yacht. Look what it's called, Algorithm. Obviously, algorithms are working for someone. This shows you how our market timing index works in a typical year. You can see we get a lot of opportunities to buy, sell, usually several round trips a year, and its accuracy is about 90%. Let me show you how it's done over the last 3 years. The S&P 500 was up 59% over a 3-year period. We were up 113%. That's roughly double the S&P 500 index. So if you want to earn double the index, but with a lot less volatility, we have almost no drawdowns that exceed more than 5%. Then you want to use this algorithm of mine to help you trade. Bill was a struggling tobacco farmer in Virginia who wanted to supplement his fading agricultural income. After making $3.4 million with the Mad Hedge Fund Trader, he still farms, but now he's growing grapes in California's Napa Valley for the high-end wineries. Philip was tired of working in the boom and bust of the oil and gas industry in Texas. After doubling his money every year for several years, he now earns a generous living as a full-time trader. Philip now trades whenever and wherever he wants and doesn't carry around a year-round sunburn like he used to working in the oil business. Jackie was an Australian hospital administrator who turned $50,000 into $2 million with my help and became a major player in technology stocks. She retired in her 50s and now spends her time cruising around the world. This is a picture she sent me from one of her cruise ships. So what do we do about all this? Well, stocks, you want to buy the dips. Bonds, you want to stand aside. Commodities, buy dips. Energy, stand aside. Currency, sell the US dollar rallies. Precious metals, you want to buy every dip. If you were not up 55.86% last year as I was, you were reading the wrong newsletter or following the wrong trade mentoring service. 50.8% trailing 12-month return, that is a return to die for. It was roughly double the Dow average gains for last year, and this is the business we're in. If you think I was just lucky last year, we actually made 35.3% average annualized return 10 years. You can see it's the same kind of performance. Up, sideways, go on and on forever. This is a typical hedge fund type performance, and it can be your performance also. When you get these kind of numbers, you can do things like other people don't get to do, like ride the Queen Mary in the owner's suite, a 2-story, 2,000 square foot suite from New York to Southampton, England. Once you get there, you can ride the Orient Express from London to Venice, Italy. That only costs $8,000 a night, and every dinner is black tie. Once you get to Venice, you can take a helicopter island to island on private shores. Beats the hell out of struggling with all that traffic. And believe me, the traffic in Italy is horrendous, since the roads were built by the Romans. The very long view, and here's where the really big money will be made going forward. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones, as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. That will create an economic boom that will last another decade starting in 2021. And that is me watching climbers come down from the Matterhorn from my home in Switzerland. If you think these are all pie in the sky, wild predictions, let's take a look at the past. From 1982 to 2000, the Dow went up exactly 20 times in 18 years. Are you ready for a replay? Well, if you take the market bottom we saw in 2009, move it up 20 times in 18 years, you get to 120,000 in the Dow by 2027. And you think that's crazy? We've already done half of it. Yes, if you take the 82 to 90 chart and apply it to today, we are exactly in the halfway point. We've gone up 400% from the bottom. We only have to go up another 400% to get to 120,000 in the Dow average. So, except this time it's different. Technology is hyper accelerating on all fronts simultaneously. The development of a functional quantum computer means that computation ability is about to increase a trillion-fold at no cost. The world's major computational challenges will shortly be solved, such as weather forecasting and cancer cures, and also the stock market prediction. All major human diseases will be cured within 10 years. Live another decade and we will have a shot at living to 150. Needless to say, tech and biotech stocks dominate in this scenario and will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheaper operating software with Windows, and a new internet. The 2020s will have 10 times this number of technology drivers. And this is a quantum computer which will change our future beyond all recognition. So who will show you how to play the next 95,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top trade mentoring service in the industry, up 55.86% in volatile markets. Follow my research and market beating trade alerts and you will rake the profits in. Let a Marine combat pilot steer you to big profits. I trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. And we're sending you long and short selling opportunities for all of these all the time. This is a typical month for us. 10 out of 11 trade alerts made money, which is slightly more than a 90% win rate. You can see we bought the S&P 500, made a 16.3% profit. We sold short U.S. Treasuries. We bought the Russell 2000, Amazon, Apple, sold short Biogen. Actually, we bought Biogen, but then got stopped out because of a sudden down move. We never run losers at all. We stop out very quickly because guess what? We know that 90% of the time, the next trade will be a moneymaker. And then we went on to buy Palo Alto Networks, sold short the yen, sold short treasuries, bought the S&P 500, and bought gold. And that is really a very typical month for us. Many stocks, many asset classes, long and short. It's just a matter of time before technology and biotech stocks break out to new all-time highs. By the way, I'm saying that for 10 years now. Watch this space melt up going into the end of 2020. Get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. And yes, that is a 24-inch rainbow trout, which I caught in Pyramid Lake in northern Nevada. Here's how it works. A little while ago, we saw an opportunity to buy Micron Technology right here. So I sent out a trade alert. It says buy Micron Technology at 42.01 or best, opening trade, and to get a $10,000 exposure, we had to buy 238 shares. What happened after that? Well, Micron Technology went up 15% in the next several days. So what did I do? I decided to take profits because it was a double top risk setting up here in the stock. So I sent out another alert. It said, take profits, sell Micron Technology at 48.58 or best. It's a closing trade. And on this one trade, we made $1,563 in 15 days. Not bad. These are some of our winners over time. We recommended Nvidia, up 267%. We recommended Lam Research, up 77% in 10 months. And we recommended Baidu, up 2,240%. With my Global Trading Dispatch service, you get a daily research letter, instant trade alerts sent out at market sweet spots, about 200 a year, and all the reasons why you should execute them. You get live bi-weekly strategy webinars with this one and an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you can consume in a lifetime, access to a 12-year database on investment ideas, searchable by names and ticker symbols. And I'll even give you the name of a good surfing school in North Africa with a seniors division. Warning, it's a lot harder than it looks. Here's what I'm not going to charge you for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge you $10,000. That's what I charge my concierge clients who get my personal cell phone number so I can act as their investment 911. And I'm not going to charge you $5,000. That's what I charge my advanced options trading clients. And I'm not going to charge you $3,000. This is the cheapest price on my website and the lowest I have ever offered. This is the real deal. Creating this product cost me millions of dollars. With the best customer service in the industry, running it costs me millions more. Today, and only through this webinar, you can get 6 months of our service for just $995. That is a 66% discount to the full price advertised on our website. Just click on the chat box on the right. That will take you to a dedicated sales page where you can get this offer. That is the only place you can get this offer. It's only offered today. It's a one-shot deal. This is a limited time offer. We only take 25 new subscribers at a time, so it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right. Let me make the money for you to pay for your own subscription. You make the trades. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. Just click on the chat box on the right. It's the offer you can't refuse. 6 months for just $995. Buy now and you will receive my Mad Hedge 2020 All Asset Class Review. It'll give you my outlook for the entire year on all asset classes, including stocks, bonds, foreign exchange, energy, precious metals, commodities, and real estate. In this kind of market, you need a real gunslinger to help you out, and I fit the bill nicely. Also, if you buy today, you will immediately receive a trade alert, which you can execute this second with an extremely high probability of success. Don't leave money on the table. 90% of these trade alerts make money. Buy now and it'll be in your inbox within 5 seconds. And just to tease you a bit, this is the chart of the stock I'm recommending. But is this a buy or a sell short? What industry is it in? To find out, you have to subscribe to our service. And believe me, this has been the most reliable money-making stock I've traded over the last 2 years. So here's the offer you can't refuse. 6 months for just $995. Let me show you how to make the money to pay for your own subscription. Click on the chat box on the right. Here is the link itself in case you can't find the chat box or the link isn't there. And I have about 5 minutes left to take some questions. So let's go. Bill in Portland, Oregon is asking, can we talk to you directly? And the answer is yes. I spend part of every day calling readers and looking for ways to improve the service. You can email me anytime, and I always answer the same day. And you get a chat box on each of my bi-weekly webinars like this one where you can just type in your questions. Jim in Dallas, Texas is asking, are the trade alerts for stocks, ETFs, or options? Jim, it's all the above. We send out a range of possible securities with every trade alert so readers can tailor it into their specific needs and risk profile. Let's see, another question here from Joe in Detroit, Michigan. I've never done this before. Can a beginner start with no prior experience? Absolutely, Joe. Bringing beginners into this market for the first time is one of the primary goals of this service. And by the way, it's interesting you're from Detroit. When I first started up this service, General Motors was going bankrupt, and we literally had dozens of people who just lost their jobs at GM come to us to learn how to be professional traders, and many of them are with us 10 years later today. Joel in New York City, how often is the newsletter sent out? Joel, every day the market is open about 250 times a day, and you will get 2 newsletters a day, one before the market opening and one a little bit later with deeper research ideas. Mary in Kansas City is asking, how many trade alerts do you send out a year? Answer, it's about 200 a year, depending on what the market is doing. I can send out none for 2 weeks and then 10 alerts on a big market moving day. We don't get sweet spots in the market every day. Anybody who pretends they do get sweet spots every day isn't involved in the market at all. Okay, let me scroll through here, see if we can find any more questions. You obviously have enough money. Why are you doing this? Well, teaching people how to make money and secure their financial future is the love of my life. When you get up to my age, it's either play golf or teach people how to make money. When I was on Wall Street, I used to see so many people get ripped off by brokers, it made me sick. This is my chance to level the playing field for the regular guy like you. Let's see, more questions here. Jim in Palo Alto, are you an algorithm? Well, no, but I play one on TV. If I knew a good machine noise, I'd make it right now. Seriously, come to one of my lunches and find out. If you pinch me and I bleed, then you know I'm real, but then you might also get a punch in the nose. Never a good idea to pinch a guy with a black belt in karate to see if he bleeds. Ivan in Portland, Oregon, how would you describe your trading philosophy? Ivan, I use fundamentals for my long-term call and technicals for my short-term execution. It's what every long-term professional does. Notice that there are no pure technical analysis hedge funds. That's because technical analysis on a standalone basis loses money. Roger in Richmond, Virginia wants to know, do you offer training with a subscription? We include more training than you could use in a lifetime with books and training courses. Every trade alert that goes out includes a link to a video on how to exactly execute that trade alert, which you can then execute on your own online trading platform. Okay, let me scroll through. We're running out of time here. Let me see if we have any more questions. Let's see. Okay, going through this, going this. Here's a good one. George in Austin, Texas. Will Apple keep growing, or is it just peaking out here? I think Apple is the stock you gotta love. I mean, they're bringing out a new 5G iPhone in September. That should be enough to take the stock up to $400 a share, and the company is also developing its services business like crazy. They are no longer the high-risk hardware company they once were. Another question here, Tim in San Francisco, are the Chinese a threat to technology leadership? They aren't now, but they will in the future if we get lazy. I see little chance of that happening. U.S. tech companies are the most innovative, aggressive, and predatory in the world. While some apps are a success in China, they don't transport well to the U.S. You can't copy yourself to leadership like the Japanese tried doing. Okay, well, I think I'm pretty much done for the day. It's been great chatting with you. I can see we've already gotten quite a few subscriptions that have come in. I see Bill in Austin, Texas has signed up. Thank you very much, Bill. I look forward to working with you. I see Ramon from Miami Beach has just signed up. Let me scroll through here. I see Joseph from Chicago, Illinois is now with Mad Hedge Fund Trader, and there really are too many more here for me to scroll through. So again, thank you very much for joining me today. I'll leave the page open for a few more minutes. You have access to the chat box on the right with the link to the landing page. So this is John Thomas, the Mad Hedge Fund Trader, signing off for today. Good luck and good trading.